I just want to quickly review some of the things I discussed in the midweek Wednesday video. Sometimes the market's going to give us mixed signals. I have a daily chart of the S&P 500, and recent example of that was towards the end of June. The S&P had a few distribution days, as you can see here, and it was starting to potentially break down as it was on a key level of support around the round number of 3,000, right around its 200-day and right around its 10-week. The mixed signal was that the broader market was showing some weakness, but the NASDAQ and the leaders were acting very, very well and showing strength. So I mentioned back then, one of two things is going to happen. Either the broader market breaks down and drags the leaders down with it, or the broader market stabilizes and we resume the uptrend, and the latter is what happened. Now, one of the objectives I have with this product, as I've mentioned, is to keep you on the right side of the market. And whenever the market gives us mixed signals, just keep in mind, I'm always going to lean towards the cautious or defensive stance to do my best to protect you. I'd rather be safe than sorry. And also, when you study some of the greatest traders and money managers throughout history, they always preach defense, defense, defense. In other words, I'd rather be safe in case we break down, because if we stabilize, there's always going to be great opportunities in the future. I'm not really worried about it, but I'd rather lean towards the cautious side. Now, how that applies to what I discussed this week is that we had this reversal. Let me go to the NASDAQ chart. We had this reversal on Monday. It wasn't necessarily an ugly reversal for the market because it was just bringing us down to this, level around here. And it was heavier volume, but it wasn't, it's super, super heavy volume. But the ugly part was in the leaders, where a lot of the leaders pulled back 5 or 10% in one day, and unfortunately, it was a bad day. Now, the mixed signals this week was that I was worried that the leaders would potentially be starting a new pullback or building new bases, but this time the broader market was holding up better. So that's why I was saying, again, leaning towards the side of being cautious, maybe take smaller positions, or maybe cut a couple of new buys just to reduce exposure just in case. And the point I want to stress is that this is where I really want to stress everyone should know their own time frame and have their own objectives. I'm talking from my point of view for managing money for clients, where I have to be quick to be defensive to hopefully avoid any sort of big drawdowns. If you're an individual trader and you're managing your own money and you have no one to answer to, you might have completely different objectives. I'll give you an example of what I'm talking about. I pulled up a chart of Twilio. This is what I mean by you had a drop. It's not that the leaders, got smoked or got killed. A lot of them came down to their 21-day and the first level of institutional support. And I just wanted to be patient until we get a clearer picture whenever there's mixed signals in the market to see, okay, is this the beginning of the left side of a base that could take us maybe down to its 50-day and then form a new base, something like this, and build a new base? Or are they going to snap right back as Twilio did? Now, if you are a trader, you can be opportunistic and maybe take a small position around the 21-day and then see if it bounces. If you're a longer-term investor and you're in from a lower level and you're using the 10-week or roughly the 50-day as your guide, you're not really worried about a drop and you're sticking with it. But again, I can't stress this enough. I am encouraging people to make these decisions based on their own time frame, based on their own objectives, but I'm always going to lean towards the side of being cautious when there's mixed signals or potentially more breakdown. Back at the end of June, it could have been a potential breakdown through 3,000. And now this week, the analogy is it could be a potentially, some more breakdown in the leaders. That's why I'm going to lean towards maybe smaller positions until we get some clarity. So let's jump right into the averages. Now, I always like to look at the positives and the negatives. One huge positive is that we stabilized after that reversal. We had that reversal on Monday. Yes, it was a distribution day. And one of the biggest positives is there's very, very little distribution in the NASDAQ, where we've only had 2 days in the past month. You need the reason that's important is you need a cluster of them 4 to 6 days over a 3 to 4 week period. Review the Market Tops video in the educational portion of the website. You need a cluster of them to see any sort of major market top. So what I like is after we dropped, we came right back down to the 21 EMA, which is what we seem to do every, 10 to 13 days or so. You get these quick pullbacks to the 21 day, which is perfectly normal in an uptrend, but we got to pull back to that. We bounced back to close positive, and we had a slight accumulation day on Wednesday, so that was good to see. We paused nicely on Thursday, and then a slight accumulation on Friday. So when I mentioned in the midweek video, I just want to see a little bit, be patient until we see a little bit more information. In case we see follow through selling, I'd rather lean towards being defensive. It doesn't mean we're out of the woods yet, but I like the price action on the latter half or the later half, second half of the week, because we stabilized. We didn't see any further downside. A lot of the leaders stabilized, and I got a whole bunch to get into right now. And overall, the biggest positives are little distribution, the major averages, especially the leading index, the NASDAQ, above its 21-day, above its 10-week. When you look at the weekly chart, I mean, it was a higher volume week, so it was a distribution week. As we were down 1%, we closed about halfway in the range, so it's not horrible. It shows at least we bounced halfway in the range. That's why if we saw it higher up in the range, obviously it would be better. If we saw it lower in the range, it would obviously be worse, but at least midway. So that's what I mean by sometimes mixed signals. Now, when I jump into the S&P 500, this is where I've been talking about over the last couple of weeks. Maybe the NASDAQ stabilizes, digests. We can correct through price or through time, meaning it just goes sideways for a little bit. And maybe we get a sector rotation into some other stocks that are holding up well. Because I did mention the positives is, let me finish with the averages and I'll get into some stocks in a minute. I was going to say the positives is some things are broadening out and maybe some other sectors will participate. So the S&P, I talked about this move off of the lows here. We had a nice consolidation between 2750 and 2950 on super light volume. After a stock or an index makes a move and consolidates on light volume, that's a sign that the institutions aren't heavily selling shares. Then we made another move up to roughly break even on the year. 32.33 is roughly break even, in line with right about here, which is break even from this line here is the beginning of the year. So now, sorry to be drawing all these lines upon the chart, but this is kind of a base on top of a base where now the prior resistance around 29.50 becomes support. And then now we have a new range. And this looks like, we see very little distribution in this little handle here, sort of this mini cup and handle. Maybe we continue to digest a little bit sideways and, continue in this little bit higher end of this range and build a handle. But this is why I was saying eventually in my second half outlook, I was talking about after consolidating, eventually moving up back towards these highs, back towards 3,400. And that's a possibility. But on the weekly chart, we were up on the week. It was on lighter volume. It would have been nice to see some better volume, but overall, one of the biggest positives is very little distribution. Even that reversal on Monday, it was on higher volume, but it wasn't on above average volume, so that's nice to see. Also, the Russell, another positive, like I said, is it's back, and it got back above its 200-day. It's holding up well on the weekly chart. The Russell was up for the week. Nice sort of engulfing pattern, up 3.5% on higher volume. So that's good when there's risk appetite into the small caps. And I don't talk about the Dow much, but let me pull up the Dow. Same thing. The Dow finally broke out of this. I mean, you can see there were a lot of tight closes on the weekly chart, got back above its 200-day. And when you look at the daily chart, I even tweeted out on Friday, this could be sort of a mini, cup with handle, similar pattern to the S&P, where you got a little bit of tightness before it maybe makes a move back up to 28,000. So bottom line is the positives: little distribution. All the major averages that I just went through are above their key levels, especially on the longer term 10 weeks, a 10-week moving average. And by broadening out, I talked about in recent videos with BlackRock. It was the first financial to show up on my screens. I talked about this recently, and it was nice to see they had strong earnings, and it broke out on Friday. I talked about, so my point is, it was the first time a non-tech stock showed up on my screens. Home Depot showed up. I talked about this last week and this tightness here. Nice to see it sort of prove itself a little bit and move higher. Lowe's also, I know it's sort of home building or home products, but it's also considered retail in the sector, as you can see here with retail. Lowe's was consolidating here. Nice to see this move up, maybe while tech took a little bit of a rest. I also talked about so many home builders. I'll go through these very quickly. DHI, D.R. Horton, which was building a base in here, a nice little sort of handle to or consolidation to this overall cup. Nice to see this one prove itself and move up on some nice volume. I got a lot of charts to get into, so I'm just going to show you. Lennar, almost identical chart to D.R. Horton. LGIH, I'm just showing you a few that have been showing up on my screens. This one broke out. Nice to see. My point here is it's nice to see some other stocks besides software and semis and stuff. MTH, I talked about this range. Nice to see this prove itself. If you're interested in some exposure to the home builders, two ETFs are ITB and if I can get this right, XHB. They actually both look similar to D.R. Horton and Lennar, a couple of the bigger names in those sectors. But my point is, that's a huge positive that things are broadening out. A couple of the negatives, just to review.